Hi, this is Nick Hodge with the Outsider Club. I'm sitting down today with Midas Gold President, CEO, and Director Stephen Quin. Stephen, thanks a lot for joining us today.
You're welcome, Nick. Glad to be talking to you.
Now, Midas Gold trades under the ticker MAX on the Toronto Stock Exchange or over the counter under the ticker MDRPF. And it's been a top pick of mine for a long time. And often when I'm out at conferences and I sit on panels about junior mining or gold shares and I'm asked, what are my largest holdings or what are my top picks in the sector? Midas is always right at the top of the list for a litany of reasons. It's a very large project in a safe jurisdiction. It's high grade, it has favorable economics, and it's currently going through permitting. I'd like to unpack some of that today with Stephen. So, Stephen, maybe for those listeners who aren't familiar with the Midas story at all, could we start with just a brief overview of the project, please?
Sure. Midas Gold got going in 2009 as a private company and essentially spent a couple of years consolidating a historic mining district in Idaho that had produced about 1 million ounces of gold in its past history. But it always suffered from fragmented land ownership, lots of different landowners, different parcels that didn't prevented people looking at the bigger picture. We completed that consolidation in 2011 and went public. And since then, essentially what we've defined as one of the largest, best grade open pit gold deposits in the United States, with a substantial resource and significant amount of exploration potential beyond that. Where we are sitting now is we've essentially worked through a first resource assessment, a preliminary economic assessment, a pre-feasibility study. We're now working on the feasibility study for mine development, and in parallel with that, we've been doing environmental baseline for about 3 or 4 years, and then in September last year, we filed our permit application to build a mine, which would be one of the largest in the United States. So the project's very advanced. It's in, at the beginning of that, what should be a re-rating process as the project completes a feasibility study and gets permitted, which sees significant upside to investors.
Now, you mentioned some superlatives there. I want to talk about those a little bit. As it stands right now, the project would be the fourth highest grade open pit gold project in the U.S. at 1.6 grams per ton, and the eighth largest gold reserve. I'm not stating the reserve ounces now. I'm just talking about the resource. There's 5.5 million ounces indicated and 1.1 million ounces inferred. Can you touch on those numbers a little bit, Stephen, and put those into perspective for us? Because you're in some very good company with those numbers, specifically Barrick, some of Barrick's larger projects.
Sure. Often what you see in mining projects is they have good grade or they have size, and finding large projects with a lot of ounces of good grades is very rare, and is really what attracted me and Midas Gold to this district. And for the amount of work we've done, we've been very successful. As you mentioned, combined, there's over 6 million ounces of resource, of which 4.6 million ounces is reserves. We compared that against the U.S. government database of existing mines and projects out there, including projects that are not yet mines. And as you already mentioned, this has the 8th largest reserve in the United States. It's the 13th largest resource. So that's a lot of ounces, which is good, but does it have the grade? And, that brings the other point you mentioned, which is that this has the 4th highest grade of all the projects and mines, operating mines in the United States. But of those mines, one of them is a very small but high-grade mine, so it doesn't have the size, so it's really not directly comparable. And the third highest grade of those open pits is a mine that's scheduled to shut down in the relatively near future. So you potentially end up, towards the second highest grade open pit mine in the United States. And when you have that combination of grade and size, it gives you a very attractive cost profile from a production perspective and makes it a pretty rare asset in the United States. And when you look at the production scale and the type of mine that we're permitting to develop, initially in our first 4 years of production, we'd be the 4th largest gold producer in the United States, and then over the life of mine of the project, the sixth largest mine over a sort of 12-year mine life. So it's that combination of size and grade that makes this project pretty unusual and almost unique in the United States, of having that combination of size and grade.
There's a couple of points I want to touch on there. One of them is I recently heard you say while giving a presentation that the average open pit gold project in Nevada is 0.5 gram per ton. This is more than 3 times that grade. You know, when you think about that, people get excited about gold projects in Nevada, Carlin-style deposits. But for perspective, this is nearly 3 times as large. I thought that was an important note to make. And then secondly is some of these numbers we're citing can potentially improve, because when you went from the preliminary economic assessment to the pre-feasibility study, you lost some resources that went to inferred, so they were treated as waste. Can you talk a little bit about the steps you're taking to reincorporate those resources so they're not treated as a cost when the mine is actually in production, and how that can lead to upside for the project?
Certainly. Yeah, so the people are often unaware of the trends of grade in mines, you know, over time. And this doesn't just apply to the gold sector, it applies to the copper sector and other minerals as well. But, you know, talking about the gold space, you know, over the last 20, 25 years that I've been involved in gold projects, you know, in North America, the grade of those projects across the board has just trended downward over time. You know, the best deposits have been found and the highest grades have been mined. And so, as you commented, you know, the average open pit grade mine in Nevada currently is around 0.5 gram a ton, which is really low grade. And as you mentioned, our grade is about 3 times that. However, our Yellow Pine deposit, which is the one that we mined for the first 7 years, is actually 2 grams a ton. So it's 4 times the average grade in Nevada. So, you know, there's some really good grade material, and what that gives you is lower operating cost. So that is a significant benefit. You know, building on the second point, where you could also see cost benefits come through, is we did a preliminary economic assessment in 2012, and that type of study allows you to use inferred resources in your mine plan. So that had about a 5.6 million ounce mined volume of rock. It's not a reserve because it's a PEA, but 5.6 million ounces was mined. In the pre-feasibility study, you're not allowed to include inferred resources. So the mine plan only has 4.6 million ounces in it. So there's 1 million ounces less in the pre-feasibility study compared to the preliminary economic assessment. Where are those ounces? About 1/3 of those ounces are inside the reserve pit. So ignoring them and saying that you can't use them, they're rock that's inside the reserve pit, and because it's inferred, you have to treat it as waste. And therefore, it actually has a negative cost associated with it. And it's sort of one of the peculiarities or anomalies of 43101 reports. You know, these are the requirements, but it is the requirement. So the simple answer is, how do you, what do you do about that? Well, you go drill and convert inferred to indicated. And you actually our experience with our project is we've got a triple win out of that experience. And why do I say a triple win? Well, currently those blocks of rock, those tons, are treated as waste. So they actually have a negative cost associated with them in the pre-feasibility study. So you simply convert them from resource to reserve or inferred to indicated, so you can make them into reserve. You eliminate that negative cost. But you're not just converting it to zero cost rock, you're actually converting it to profitable rock. Therefore, you actually take it from zero to a profit. And then our experience has been, particularly the north and south ends of the Yellow Pine deposit, where we did some of this inferred conversion drilling, is the grade of the areas we drilled were higher than the inferred resource suggested. Why was it higher? Well, the reason we drilled it, because we believed it was going to be higher with additional drilling, we'd be able to push that grade up. So why I say it's a triple win is you've taken it from a negative to zero, then you've taken it from zero to positively economic rock, and then you've taken it and multiplied that grade in the northern end, we were seeing 2 to 3 times the grade predicted. So we're seeing a real win on those economics. So that should end up improving the projects, assuming everything else stay constant. With this drilling we've done, we'd see the economics of the projects improve by the drilling we've done to convert inferred to indicated, take them from a negative to a positive, but more than just a positive because the grade was better than expected. So it's kind of a complex answer to the question, but I think it's sort of been a win-win-win.
Now, I want to talk about leverage a little bit because those numbers you just cited are important, because the leverage I'm going to talk about is based on the pre-feasibility study, but it could become all the more levered if you're able to increase those reserves, like you say, and take away from the inferred that's currently being treated as waste. So as it stands now at $1,350 gold, this project is looking at an $832 million US NPV with a 19.3% IRR. And if gold goes up just $150 to $1,500, that NPV goes to US $1.12 billion. Now, that's some 10 times what the stock currently trades. Can you talk about the leverage that this project affords investors?
Yeah, and I would say there's so essentially 3 types of leverage that Midas Gold can offer investors. One is the leverage to the gold price. As you already mentioned, we have a lot of gold in the ground. We have a mine plan that says we're going to mine 4.6 million ounces. And at different gold prices, obviously the higher the gold price, the more the project is worth. And so there's significant leverage there to a rising gold price environment. So obviously that's one type of leverage. We don't control that. Gold prices, will rise or fall as it does. But in a rising gold price environment, we offer investors significant leverage as the gold price rises. What we also offer is the conversion of those resources to reserves, which will also increase the value of the project. So assuming a flat gold price environment, the value of the project would increase by converting that material. And in the pre-feasibility study, we identified about $390 million worth of metal that was excluded from the preliminary feasibility study that was included in the preliminary economic assessment. So hopefully by converting a chunk of that, we add value to the project itself. Then the third type of leverage we offer is to get the project permitted. And, you typically see projects trading at a discount early in the permitting process, and then that discount decreases as time goes forward and you get closer to permitting. And so typically projects at our stage are trading at 0.2, 0.3 times net asset value. By the time you're permitted but not yet funded, you're trading around 0.5, 0.6 times net asset value. And by the time you're permitted and funded to build a mine, you're trading around 0.75, 0.8 times NAV. And then when you're in production, you're trading around 1 times or even a bit higher than 1 times NAV. So we offer that leverage as well because we are permitting. So theoretically, you have the opportunity to see all 3 of those happen. If you get a rising gold price environment, you add value to the project itself, and you move forward so you're in the permitting, so your multiple expands, you get a multiplier effect. So you should see all 3 of those coming into play and, leveraging off each other and seeing that multiplier effect of all 3 coming to account. And you can argue as well that there's essentially a 4th type of leverage, which is simply adding more ounces. And, and there is significant potential to increase the overall resource of the project by doing further exploration. But that's something that we'll come to, post-permitting further down the road. But people shouldn't forget that there is a lot of more potential here to find more ounces.
Well, there's certainly many shots on goal for Midas stock to undergo a re-rating, and I've seen some of the peer comparisons comparing the price to net asset value that you mentioned, and there's certainly a strong case to be argued that Midas should be valued much, much higher. And there's still something that we haven't talked about yet. There's a strategic mineral credit you have at the Stibnite project. And funny enough, it's actually one of the reasons the project was originally developed many, many years ago, and that's the antimony credit you have. Can you explain to the listeners what the antimony credit is, what antimony is itself, and what it's used for, and the parameters of the quantity of the mineral you have at your project?
Sure. So antimony is a very unknown mineral, not well understood, but one of those important, lesser known minerals. And it was, as you said, it was the reason this was developed as a mine site back in the 1920s was for the antimony, and the gold was a secondary byproduct. And in fact, as the mine developed and then the Second World War and Korean War expanded, most of the metal that the U.S. was using was coming from China, and when Japan invaded China, that supply was cut off, and this site took over and actually produced about 90% of all the antimony in the United States for the Second World War, Korean War. So it was a very valuable and important mine. In fact, there's a telegram from Eisenhower to the mine thanking them for the contribution to the war effort.
Wow.
So that happened up until about the 1950s, and then in the 1950s, post the Korean War, the government stopped buying antimony because they could now buy it from China again, and replace that supply, and kind of everybody forgot about it. When we started to relook at the site, we recognized the importance of the antimony and focused some of our effort on defining that, and have defined a significant resource there that comes along with the gold as a byproduct. In the preliminary feasibility study that we talked about, it's about 5% of the cash flow. So it's nice, it's the icing on the cake. In the preliminary economic assessment, it was about 9% of cash flow. And the difference is, why was it more in the preliminary economic assessment, is there was some historic data from the operating days during the 1940s and 50s that was incorporated in the PEA but not used in the PFS. And so some of the drilling we've done has been to replace that historic antimony data with new data, and that potentially could benefit the antimony credit. What is antimony? Well, its primary use is as a flame retardant. It's about 60% of world demand, and it basically stops things burning. So plastic, insulation around copper wire, foam in chairs, mattresses, carpets that are made of nylon, and you drop a cigarette on them, they just melt. They don't catch fire because of the antimony in them. So they're really critical for a lot of retail uses as well as industrial uses. So, the military is really dependent on it, the energy sector, because what do those two industries want? They don't want things to burn. And so antimony is really important. And one of the big demands or uses in the Second World War was painting the wooden decks of aircraft carriers, because people forget the early aircraft carriers in the Second World War had wooden decks, and if a plane crashed or somebody dropped a bomb on those wooden decks, they would catch fire. And so they used to use antimony paint on the wood to prevent the aircraft carrier decks from catching fire. But that has developed obviously over time to much more sophisticated uses. Cell phones, iPads, computers, they get hot. Obviously everybody's aware of the battery issues with Samsungs. Well, you don't want them to burn, and that's the antimony in there that prevents them burning. They just go black and melt as opposed to burning. So it's a very critical mineral for that use. And what you're seeing is Chinese production, which has been the dominant supplier, apart from the Second World War, Korean War, of world antimony. Their production has been going down as they've depleted their mines after 60, 80, 90, 100 years of production, and a sort of developing shortage of longer-term production, medium to longer-term production. And I think that could be very, very beneficial to this project, let alone the strategic aspect of the U.S. producing its own antimony as opposed to being dependent on China for military demand of antimony.
I think it's a key differentiator of the project. I know the U.S. government is interested in securing their own domestic supply, and I believe I'm correct in saying that the U.S. Geologic Survey has been on site at Stibnite to do some testing for the mineral themselves. So I think it's just one in a list of many differentiators that have attracted the attention of many high quality and strategic investors that have now become a part of the Midas story. So I want to switch gears just for the last part of this interview and talk about some of those people and companies that have invested in the project. You have currently something like $30 million in cash, and most of that came from a financing that billionaire John Paulson backstopped. You were able to sell a 1.7% NSR to Franco-Nevada, and you also have Tech, who took a 9.9% stake in Midas. Can you talk about some of those strategic investors and why you believe they came a part of the story, and any other ones I might have missed?
Sure, and I think it hits an important point is that the long-term strategic investors are looking at this project and recognizing its rarity, its uniqueness, it's the nature of the site, which we'll talk about in a bit, I expect, being a brownfield site, et cetera. And that's just attracted some real quality investors that have funded the company through this process to get to where we are today. As you mentioned, Franco-Nevada, which is the biggest royalty company in the world, purchased a 1.7% NSR, and this was the earliest stage royalty that they'd done on a project, and it was basically a reflection of the quality of the project. They don't normally go in this early. Similarly, Teck Corp, which is Canada's biggest diversified mining company, mining copper, gold, coal across North America primarily, and zinc, one of the world's biggest zinc producers. They looked at the quality of this asset, and Teck's investment approach, both to its own projects and others that it invests in, is always looking for quality assets. They're not so focused on the commodity, which is why they're diversified. They just look for high quality assets, and they bought 9.9% of the company when we did the financing with them back in 2013. And then those two investments funded us through until beginning of 2016, when we were looking at the next round to take us through the permitting process, and we approached a variety of potential investors, and Paulson & Co., which is a New York-based hedge fund, backstopped the entire $55 million Canadian financing that we wanted to do, but our existing shareholders had the right to participate. So Paulson & Co. ended up with about $35 million of that financing, and our existing shareholders with about $20 million of that financing. But again, it's a reflection that our existing shareholders stepped up to the plate as well and took down their right to participate in the company. So that's provided as the funding for the last couple of years and into 2019.
So let's bring it up to where we are today then. You're currently going through permitting, and one of the aspects of that I think that will be highly beneficial to Midas is the environmental aspect of the project. As you mentioned, it's a brownfield site, and there's been some historic environmental damage. There's some tailings that are piled up and leaching into a watershed. There's a fish passage that has been closed for some time. And part of the plan, as I understand it, in bringing the Stibnite project into production is to remediate some of those things, to use some of the waste rock for construction and to reopen the fish passage. And to add to that, you've also got some environmentalists on the board of the company, as well as have created a local subsidiary to sort of bring locals into the fold. Could you comment on some of those initiatives that you've taken and maybe dovetail that into the permitting process and how they work together?
Sure, I'll be happy to. And I think it's something that's unique about this project has been our approach to this site. As you mentioned, this is a brownfield site. What does brownfield mean? It's basically been mined. It was mined from the 1920s to the 1950s, and then there was some small-scale heap leach gold operations in the 1980s and 1990s. But particularly the early stage, the 1920s to 1950s, led some pretty widespread devastation on the site because this was being done for the war effort. It was, full speed ahead down the torpedoes. Get the antimony out of the ground. We need it. We need it for military purposes, and not much of a focus on environmental aspects of what they were doing in that time. And then when the mine shut down in the 1950s, everybody just walked away and said, okay, we're done. Environmental standards were pretty much non-existent in the time. And the entities that mined there don't exist anymore. They're not an existing company. So the site has been left in pretty poor shape with, you listed a variety of the, the issues that are on site, metals leaching into groundwater, sediment runoff, waste dumps just eroding into the river drainage. And then, as you mentioned, fish passage, but to put it in practical, down to earth perspective, they dug an open pit across. It's a long name, but it's the East Fork of the South Fork of the Salmon River, and it's really the last two words that are the key ones. Salmon River. What does that tell you? There used to be salmon, and salmon haven't been able to migrate upstream since the early 1930s. And there's essentially no way for salmon to get upstream around the site, even if you try to do something on a temporary basis. It's just impractical given the amount of impact. So what we did when we took over this site is we looked at it and saw this as an opportunity to integrate remediation of all that historic disturbance with redevelopment of the mine site and make it a win-win. So it's not just an economic benefit to the local community and our shareholders, but it becomes an environmental win as well. And so we deliberately focused our activities and our plans for the future development of the site on areas that have already been disturbed and have negative ongoing impacts and consequences to the environment, and said, well, we're going to clean those up, and we're going to clean them up early in the mine life so that we can demonstrate that we're not just doing something for economic gain, but for environmental gain as well. And so our whole plan, and when you look at our disclosure, you go to our Midas Gold Idaho website, and you go to our documents filed on CEDAR and on our own corporate website, you'll see that emphasis and that continually recurring theme of environmental improvement and restoration of the site. And that's the opportunity here, is to make it a win-win across the board. And that affects permitting, because we're not going into a greenfield site being one that's never been touched. It's not pristine wilderness. It's not undisturbed rivers and forests and so on. There's been a huge amount of impact on this site that's been negative, and that puts a very different spin on it from a regulatory perspective, is that we're not just going to create a negative impact on the environment, we're going to create a positive impact on the environment by redeveloping the site and restoring all of those negative impacts. And we're very heavily involved in all of that aspects of the site redevelopment and incorporating them into our plans for the future. And that creates a very different attitude with the regulatory community and the local citizenry and various other groups, where they look at this site and say, well, I may not like mining overall, or I may have concerns about mining overall, but I see the good you're going to do. Therefore, it's worthwhile me putting the time and effort into supporting this project, working it through the regulatory process. And, I think that makes a significant different perspective on a project like this versus what you would traditionally see.
I think it's key that you're going to leave the project in better environmental standing than it currently is. And that's what's led many people who would, I would say, typically be opposed to the project to support it. I'm a new resident to the inland Northwest myself, and I've written in support of Midas, and I know locals are looking forward in many respects to getting the project done, because they'll still be able to have access to the wildlife and nature there in a better state than it currently is. And speaking of that, what are the next steps, down the road to getting Midas going? What are the next steps of the permitting process? What are the next news items, and what are some milestones and catalysts that shareholders and potential shareholders and really all stakeholders can look forward to?
Certainly, as we lead into that, perhaps I didn't make comment on the local people involved in the company, and that kind of leads into the sort of where do we go next, is that we did create an Idaho board. So the project is owned by an Idaho subsidiary, and that Idaho subsidiary operates with its board with a majority of independent directors, and those independent directors are former county commissioners, former mayors, former or leading sort of activists in the local community, and bringing them on board, I think, is a demonstration of the support the community has for going the right way with this project. And I think it's will continue to help with the next steps as we move the project forward. So what are those next steps? So on the permitting side, and there's kind of two parallel tracks, one's the project technical side and one's the permitting side. Talking about the permitting side first. So currently what the regulators are doing is evaluating the proposal that we submitted and all the environmental baseline, which is multiple years of collecting data on fish, water chemistry, wildlife, all different kinds of things that you can think of, have been collected over multiple years. And all that data has been submitted to the government, as well as how do we plan to redevelop it. So they have an obligation to evaluate that data and make sure that data does cover everything that is being covered in our plans, and we've adequately addressed the environmental aspects of the project. And they then also look at the project and say, well, okay, Midas has put a plan A down on the table. They believe this is the best alternative to move the project forward. But is there a better alternative? Is there a better way to do this from not just an environmental perspective, from an overall perspective on the project? And so they're working through that now. We believe we've put a very strong, solid plan together. And we don't believe that there are any realistic major changes to the project, but it doesn't mean there aren't smaller changes that improve things on a local level, sections of the road to site or different things like that. So they're currently working their way through that process, and that will all come together in a draft environmental impact statement, which should be published in the third quarter of next year, and that is then publicly available, and the public can see this is what Midas proposed, this is what the regulators have looked at, these are the points they considered. They've looked at the protection of fish, how you're going to get fish back upstream, protection of wildlife, improving the water quality, all those different aspects, and if there are any recommended alternatives or considerations that they think Midas should incorporate into the plan, they'll be identified as well. And then the public gets to comment on that. The public comments are then taken, and the regulators revisit all of those comments in the project, and then they go to a final environmental impact statement, which then supports a recorded decision, which is basically you have the approval to go ahead. So that process kind of works its way through to a final decision-making process towards the end of 2019. So that kind of runs in one track. The parallel track of that is getting to a feasibility study as opposed to the pre-feasibility we have now. So what are the principal changes in the feasibility versus the pre-feasibility that we're focused on? It's primarily incorporating the additional drilling we've done and updating the resource estimate, and we plan to complete that first, or an updated version of the resources, likely in Q1 next year. And then there may be some refinements, which will primarily be adding additional data that we need from an environmental or operating perspective in a final resource in the feasibility study. The feasibility study is scheduled to be completed in end of Q3, early Q4, 2018, the next year. And the other aspect of that study, which is being finalized, from an information perspective, is the processing side, and we're in the process of wrapping up pilot scale testing. Pilot scale is basically large scale testing that demonstrates how this should work on a continuous basis in operations, and that supports the feasibility study. So with those two pieces of additional new information, new resource, pilot scale metallurgical testing, all completed during Q1 next year, maybe a little bit into Q2, we then step back and say, okay, what is the cost of this facility now? Has the cost of a truck changed? Has the cost of a ball mill changed? What's the updated cost of lime or different diesel, etc., and update all the capital and operating cost numbers for the facility, which then will feed into a feasibility study, which I say should be completed in Q3 next year. So when you look at the sort of major milestones, we should have the resource completed in Q1 next year. We should have the metallurgical work completed in Q1, maybe early Q2 2018. Then the feasibility completed at the end of Q3, the draft EIS out and published around about the same time, and then finalized permitting in 2019.
You know, if you look at that famous chart of the value of a mining company, a junior mining company, relative to its life cycle, that would put sort of Midas in the quote unquote boring part, when the economics are sort of known and the permitting is ongoing. And I think that creates a significant opportunity for shareholders, because the current share price is significantly discounted relative to the known economics of the project. And that's notwithstanding all the things that we talked about today, that could lead to a re-rating of the stock, moving the inferred resources to indicated rising metals prices and things of that nature. So I quite think it's an exciting time to take a look at Midas and get involved. And I've been urging readers of mine to do that. If they'd like to learn more, I have a report about the company up on the website, and they can also go to MidasGoldCorp.com to see maps and presentations and press releases and things of that nature. Stephen, I want to thank you again for taking time out of your day to update readers and perhaps introduce them to the story. Is there anything else you'd like to add before I let you go?
Well, I think you really could probably hit on the key point, which is that life cycle of a mining share. And in my opinion, and this is where I tended to focus my career, the best risk-reward value opportunity to investors is in that boring period when you're in the permitting and feasibility stage, because you already know you have a project that works, because you've already completed a pre-feasibility study, et cetera. So now you're permitting a mine to be built. So your only risk is the time it takes to get through that regulatory process and complete the feasibility study. And you're not out there trying to find a new deposit that might be economic and then spend a whole pile of money drilling it off. You've already found that. You know what you have. And so there's a tremendous value disconnect. And Midas isn't unique in that. There are other companies that have gone through that cycle or are currently in that cycle where you know you have something significant. It's good value, it's low price, and you have that last shot at investing in the company before that re-rating happens, and as you get the project permitted and the feasibility gets completed. And so I always, I see this as the best value opportunity you see in the life cycle of a mining share on a risk-reward basis, because exploration is high risk. I'm an explorationist. I spent a lot of time doing exploration, but the odds are significantly more in your favor, at this stage of a company than it is at the exploration end of the spectrum.
Well, Stephen, I'm very much looking forward to that reward. Here's to wishing you and Midas shareholders a prosperous 2018. Thanks again for joining me today.
I appreciate it, Nick, and happy to talk to you whenever we have updates.